Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be analysing Ferrari's stock. We'll be using fundamental analysis via TIKR terminal to go through the financials, and then I'll stick the free cash flow into my DCF and we'll come to a fair value of their stock. Let's get straight into it. Well, Ferrari. So Ferrari is an Italian luxury sports car manufacturer based in Maranello, Italy. Founded by Enzo Ferrari in 1939 from the Alfa Romeo racing division, the company built its first car in 1940 and produced its first Ferrari badge car in 1947. So a little bit about the history of the company itself and who it's owned by. So Fiat acquired 50% of Ferrari in 1969 and it increased its stake to 90% in 1988. But then in October 2014, Fiat Chrysler announced its intentions to separate Ferrari from FCA, and as of the announcement, FCA owned 90% of Ferrari. The separation began in 2015, and the restructuring meant that Ferrari was its standalone company eventually, and the company was incorporated in the Netherlands, the new holding company for Ferrari. FCA, so basically 90% of the stock is listed and 10% is owned by Piero Ferrari. The spin-off was fully completed in 2016, so a bit complicated, but basically Fiat owned majority Ferrari, they spun them off, 90% of the shares on the stock exchange, 10% are still owned by the Ferrari family. Basically that's what it means. The company itself, massive brand, we know the F1 team, massive team in racing, especially F1, probably Ferrari road cars are generally seen as a symbol of speed, luxury and wealth, as it says there. One of the biggest brands in the world, which is not a surprise. Now let's have a look at Ferrari's sales, and we'll start with sales per business. So car and spare parts in 2021 made up 84% of sales. Sponsorship, commercial and brand made up 10%. Engines 4%, and other, a measly 2%. So most of it comes from the cars. Sales per region, so rest of EMEA. I need to remember what it is again. Can't remember, to be honest. 33% is there. United States 22%, APAC, Asia Pacific and continent, I think, 13%, UK 11%, Italy 10%, China, Hong Kong, Taiwan 8%, and the Americas 4%. So quite diverse worldwide, big worldwide brand. If you've got money, you probably own a Ferrari. So if you're a millionaire, billionaire, maybe not millionaire, but billionaires are Ferraris, we all know that across the world. They'll be driving a Ferrari as well, so it makes sense for it to have global sales. Now let's have a look at the financials for Ferrari, and we'll go on TIKR terminal to take a look at these, and we'll start with the income statement. So it's all in euros, so revenue from 2017 to 21 has increased a fairly nice amount, but before 2021 it's stagnant, to be honest, so there wasn't much growth. So something to bear in mind, 2021 could be a normal year, who knows, but if you take out 2021 it's stagnant, just to bear in mind. Net income, but net income has been increasing, so even if revenue's been flat, looks like they've found a way to make more profit, which is always a really good thing to see. Can't complain about that. Shares outstanding have decreased ever so slightly, so that's a good sign. Balance sheet time, and cash has gone up over time. Love that. Onto the debt. So debt has increased a little bit last 12 months as well. You can see over the past 5 years or so it's increased by about €1 billion. So what have we been spending that debt on? Something we need to know, to be totally honest. Have we been putting that debt to good use? Return earnings, yes, they've been increasing. You can see it was negative in 2017, but look, negative, now positive. So it looks like we're going to have another good year, which is a good thing. Let's have a look at free cash flow now. So cash from operations minus capex is free cash flow. This is what cash is free for the business to buy back shares, pay dividends, allocate capital back to shareholders and benefit us for owning the company. This has been increasing over time. You can save it's not much capex. It usually stays about 350, which is a good thing. If the capex stays flat and it can increase the cash from operations, it means the free cash flow is going to go up. So maybe even if you take out 2021, it's still looking pretty decent. It's increasing, so that's a really good sign. But yeah, if you enjoy me going through TIKR Terminal, why don't you check it out yourself? If you're a stock picker like me, someone who analyses businesses, and this is a really good platform to do so. It has all sorts of different information on it, financials wise, valuation estimates, transcripts. You can listen to, earnings calls, etc. Really, really good. And it goes back even further. I only have it going back 10 years because I don't think I need to go further, but I think it goes back all the way to 2005. Might be wrong, might go even further. But if you check out TIKR Terminal, link in the description, sign up through the link. Happy days, happy analysing. I almost forgot. Let's have a look at the ratios. I was a bit presumptuous there. I totally forgot to analyse the ratios, but let's have a look. Reason I like this business, return on capital is very high. It's in the high 20s most of the time, which I really do love to see. Gross profit margin is pretty consistent as well. Net income margin, this company, has got a lot of profit and a fair bit of free cash flow as well. Interesting that the free cash flow is a bit different to net income, something you'd really want to have a look why. Must mean we have quite a bit of capex, but yeah, something you want to see. Right, okay, so the CCC is negative. Love that. That's a really good thing. It basically means how does it work? Their suppliers are essentially cash financing their business. Not bad. That's not a bad trait to have for a business, is it? Total debt to capital is a little bit high for what I'd like to see. Just a little bit above that 50% mark, but if it's a good business, you can manage it. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Now let's have a look at the genuine impact stats for Ferrari. I must out the quality. It's a bit all over the shop really, so profitability very high as we've seen, but when the financial stream and capital allocation is weak and poor, so something to look into there. Value wise, it's just looking expensive, another expensive stock. You can't get away from them these days unfortunately. But yeah, it's looking like one of the most expensive on the platform, forward P of 50. Yeah, questionable, let's be totally honest. I don't think any company can justify that. There's not many companies I know that can justify 50p ratio anyway. Historical growth, they don't pay dividends, but it's looking medium and high, so yeah, take that as you will. But what I'm getting from these GI stats is that it's just an expensive company. But yeah, interesting anyway, some genuine impact. Now let's have a look at my analysis checklist for Ferrari, and the company itself is worth $40 billion, 36 billion euros. So yeah, let's have a look. Current share price of 209. I don't know if that's updated because that's what that says. Yeah, I don't know why that's not updated. Anyway, is what it is. We'll deal with it for now. Return on capital very high. Gross profit very solid. Net profit there as well. So they're in the green. Free cash flow is a lot different to the profit. So something you'd want to see because these over time should be very similar. And you'd want to know why basically, why they're not very similar. Current ratio way above 1. We spoke about the CCC being negative, which basically means the suppliers are cash financing their business, which is a very, very good trait to have. Companies like Apple have this, and companies like Adobe have this as well. Yeah, very interesting that Ferrari do have this trait, and it's a good trait, don't get me wrong. Some of the best businesses around have this negative CCC. Total debt to capital just above 50%, something to keep an eye on. Proven ability to grow, all in the green. We had a good 2020, so that's why that's all in the green. And the return earnings are now positive, trailing 12 months, which is good. Capital allocation, a little bit of debt added to the business. If it's financed to growth, maybe it's a good thing, but who knows. Decrease in share count. It says dividend growth here, but I thought it said it didn't have dividends. I'll have to have a look at that and see what the crack is. Good acquisitions. Does it say there's a dividend yield? No dividend yield, so that's maybe wrong. I've maybe done something wrong there. What's 193? 193, what's that say? It says there's dividends, but it doesn't show up on here. Strange, who knows? But yeah, it says there's been dividends anyway. Good acquisitions as well. I won't take note of that because it's a very small figure. But yeah, 80% overall for this brief analysis here. But then we'll have a look at this. So yeah, I also don't understand why that's. These figures come from Google Finance, so when it says NA, I'm a bit stuck. But anyway, the price free cash flow is 40, way higher than you'd want it to be. And for a 10% return, a DCF is showing $67 per share. Because I've done it for the shares listed on New York. So they need to drop 68% still. So it needs to drop quite a bit, unfortunately. Let's have a look. So yeah, free cash flow in euros converted to US dollars, 67. So simply needs to drop like a ton of bricks still. There's not much more to say about it apart from that. I think it's a good quality business. A few things to keep an eye on. I want to know why the free cash flow is not the same as the profit or similar. There's a little bit of a disconnect there. Total debt to capital, don't want this going up anymore. I want that to stay the same. Otherwise, I like Ferrari. You know, I'd love a Ferrari obviously, but the stock's not too bad apart from the valuation. So we will see in the coming bloodbath if this does ever hit 67. But if it does, I'll be getting interested in then. Yeah, we'll just have to see. Who knows if it'll drop 68%, but weirder things have happened in the stock market. So there we have it, that was my full stock analysis for Ferrari, and if you enjoyed today's video then please subscribe to the channel. Thank you very much for watching, I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one, however you can check out some of these videos.